information there. Let's go to, I want to share this, make sure I got the link. Okay, and let's tweet this out. AMC stock. Okay, that tweet was sent, and I'm going to switch to my personal account to get the word out. Just going to retweet that real quick, and we'll see if anybody joins. Okay, I want to see all chat. Not playing nice with Google Chrome. Alright, David is asking me to share something. Ah, is this the space? Okay. I want to copy the message. Are they live right now? Hold on, I gotta check with today at 5. Okay. Alright, so today at 5. Make sure I respond to that. And I want to share this. Share via tweet. And I need to get David's handle. Okay, so there he is. Okay, tweet was sent. All right. Okay, I need to see. Oh, do we have somebody? Seeing one concurrent viewer. Let me see if I can. What did I do? Accidentally added a stream marker. Bit new at this. This freaking chat is not. I want to see all chat. Come on, can I pop this out? Participants. Oh, it's just me, is what it looks like. Okay. Participants. I want to pop out chat. There we go. Okay. And I want to change this from top chat to live chat. There we go. Okay. configuration over there. Ooh, okay, yeah, stretch that out a bit. And let's move that shot. Expand that there. Okay. Let's see what happened here. All right. Yeah, and video's public, so concurrent viewers, chat rate, playbacks, average watch time 408. Ooh. Let's see. Got 3 concurrent viewers now. If you guys are here, this is my first stream doing this. I'm seeing 3 concurrent viewers on the stats on this video. Go ahead and drop something in the chat, left, right. I don't know which way the chat is on your screen. Hold on, my wife's giving me a call. I'll be right back. Okay, that phone call's over. Looks like we've still got 1 person in here. Hi, by the way. Don't be shy. Put something in the chat. we'll have a conversation. So let's see, what was okay, on to doing some research on what we've got. So I've got my notes here. Already done my technical analysis, just main talking points on AMC. Let's see, it looks like it's doing pretty good right now. Technical analysis is really quick though. I'm just probably going to cover that when I do the polished video. So the thing that I look for most is news, because news is going to news will give us an indicator of what's probably going to happen on future trading days. So we will start with that first. Right. Okay. So Reddit is my go-to for good DD and any news. Let's see. This post 8 hours ago. Oh, okay. That's not anything that would affect the stock price. Trey's update for surgery. Yeah. Let's take a look to see what's going on with Trey. Trey's trades. All right. That looks like a pretty big piece of news. We will go dig into that. So June 7th, where's that? Fox Business. Let's see. SEC short selling. Let's take a look at news. National Law Review. All right, so let's take a look at National Law Review. I'm not familiar with them. Wikipedia. National Law Review is an American law journal, daily legal news website, and legal analysis content aggregating database. Categories. Let's see. First issue 1888, so they've been around for a while, based in Chicago, Illinois. All right. Cool. Let's see if there's nothing, not a very big article. It looks like it's pretty reputable, so let's go ahead and check that out. This was June 7th. That was today. Cool. All right. SEC brings naked short selling case. Naked short selling is often claimed by struggling public companies. What is short selling? We know what short selling is. What is regulation SHO? Is that mentioned beforehand? I didn't see it. Okay, so it was referenced here. So naked short selling is often claimed by struggling public companies to be the source of their woes. There have been relatively few cases addressing naked short selling. Recently, however, on May 19th of 2021, the SEC charged a broker-dealer with violating the order-making and locate provisions of Regulation SHO. And Regulation SHO, enacted in 2005, established a locate and closeout requirements. Okay, gotcha. So, like all orders, sale stocks as long, short, or short exempt. A sale order can be marked long, only if two conditions are met. First, the seller must be deemed to own the security, which occurs only to the extent that it has a net long position in the security. Second, the broker-dealer must have possession or control of the security to be delivered, or reasonably expect that the security will be in its physical possession or control no later than the settlement date of the transaction. Okay. And let's see. Rule 203 requires them to locate securities before being sold before effecting the short sale. This locate requirement means that they must borrow the securities, enter in a bona fide arrangement to borrow the securities, or have reasonable basis to believe that securities can be borrowed so that they can be delivered on the delivery due date. Okay. Regulation, SHO regulates short sales of securities and broadly speaking is aimed at minimizing naked short selling failures to deliver and other practices. All right, what did the broker-dealer allegedly do wrong? According to the complaint, the broker-dealer mismarked 96% of a certain hedge fund's short sale orders of two separate issuers' stock, totaling more than $250 million as long or short exempt. This mismarking allegedly generated $1.6 million in brokerage fees to the broker-dealer. The effect of the mismarking was that the hedge fund was able to sell securities short, even though it already had a short position in the securities and did not borrow or locate additional shares to sell short. So, mismarked. Allegedly generated. Oh, shoot. Okay, let's see. So the SEC alleges that the broker-dealer ignored multiple red flags, including that the broker-dealer was aware of prior compliance concerns regarding the hedge fund. The hedge fund's net short position of the securities was it was selling in its brokerage account statements by hedge fund employees. So it looks like there were some whistleblowers involved in this. Hedge fund's failure to provide documentation showing that it owned the securities on the trade day, and the hedge fund's repeated failure to deliver the securities by the settlement date. Let's see. Despite these and other red flags, continue to mark the hedge fund orders as long and short exempt without taking reasonable steps to determine whether those order markings were correct. Holy shoot. So yeah, that's big. What it's just me right now, but what that means is that short sale orders, two separate issuers' stock. Oh, geez. Okay, so yeah, that's a big talking point. So we are going to link this, and this is news. And talking point here is that broker-dealer mismarked 96%. I'm actually just going to copy that. That's huge. Let's see, so we got that. That's a huge talking point. So the BD has not made its position clear yet, but it is contesting the SEC's complaint. The SEC is seeking an injunction, disgorgement of the $1.6 million in fees and civil penalties. The unmistakable message to BDs is to strictly comply with regulation SHO and pay attention to potential red flags. So the BD is contesting the complaint by the SEC and civil penalties. So injunction. I've never understood what an injunction is, so we're going to define that. An authoritative warning or an order. Okay, so pretty much just like a hey, cut it out. So the SEC is seeking to give them a hey, cut it out order, disgorgement, essentially taking the money that they made from this 1.6 million is the same 1.6 million here. Looks like that they're gonna take the profits that they made and civil penalties, which would probably just be a couple $10,000 at most, based on other research I've done before, this will be an interesting case to watch. So, key takeaways. That's a huge quote there. But at the end of it all, the BD is getting a slap on the wrist. The expected profits taken, which is 1.6 million, and then a civil penalty, which will likely be a small fine in the XXK range. All right, so that's good. So I'll provide an opinion on this. Well, my initial thought on this article is that the SEC is doing their job. Essentially, they're just showing like, hey, we're doing something. It's not enough though. It's not going to make them stop. It's not going to make them stop what they're doing, especially if the BD is contesting it. So that's another important detail to note, that the BD, and I need to establish BD here first as broker-dealer. The BD is contesting. All right, okay, and another important detail is this was the date which this occurred. So, date of charge was May 19, 2021. All right, okay, that's so that's all good to know. All right, and also need to put a note of that the National Law Review was established in 1888 out of Chicago. All right. Okay, what else is going on with Trey? Storybook of Normal Legacy Bills being written, Silverback. He's just having his buddies on the back. Can you guys hear me okay? If you can't hear me, can you guys hear me okay? Hello? Hello? I'm going to put something in the chat here. Okay, thanks, Zach. I'll turn that up a bit. Okay. How's that? Is that a bit better, Zach? Testing, way better. Okay, yeah, I just had the decibels turned down because I've got a really crappy, I've got like a really crappy microphone. It's just the one that's being used on my webcam, and it's right next to, and it's right above my MacBook, which has the fan running. So I was trying to suppress the sound of the fan running. So, awesome, cool. Thanks for being my first live chat. This is awesome. This is cool. All right, nice hanging out with you. Let's. How long have you been watching for? I'm just curious. Like, how long have you been in here? And got it on ultra low frequency. I'm actually going to move my chat up through here just for now. Okay, so you've been watching for a while. All right, sorry you had to sit through all that silence. So, all right, let me move that back here. All right, let's head down. Okay, Zach, I think I recognize your name. Do you follow my personal account here on Twitter? Let's take a look. Zach Clayton. People. Okay, let me actually just go to my followers. Oh, yeah, that's right. Cool. Yeah. So Zach, just so you know, like Streamly, we actually kind of ran out of money. I'm just working for them through they're just paying me in options right now, until we can get things going up off the ground. But I actually like what I'm doing right now. I'm actually planning on making this like my main thing that I'll be trying to make money from. So, because I mean, I figured I was wasting like half my day doing this anyway. So I'm like, I might as well try to make something out of it, because I really like doing all this. So, but cool, awesome. All right, let me come back to here. All right, so looking through Trey. Vortex. Oh, that's just retweeted. Oh, wait, no, this is my home. So, okay, so I am following Vortex on this account. So AMC's short interest update closes up 14.6, causing that is good. 2.43 billion for the month so far. Estimated short interest is currently 11.88% of the free float. It's still high. All right. Okay, I don't, let's keep crawling through Reddit. So, Wes Christian on Fox News talking about retail investors and naked shorting. I watched that I watched this clip with Matt earlier this morning. Thanks so much, Zach. We'll try to see if we can get a following. I've got a lot of background in actually doing analysis and essentially detective work. My very first job, or my first like real job after high school, is I actually worked in healthcare fraud prevention. Did that for about 2.5 years. I was actually responsible for putting a pharmacist in jail. So I don't know who, because at the time I was just like I would just verify pharmacy licenses, like probably hundreds of them a day, and then it was like 6 months after the fact that they told me like, hey Malcolm, you verified this one guy's license. They ended up looking into it, and because of your work, he's in jail now. So you took a dangerous pharmacist off the street, and it's like, yeah, and yeah. So yeah, this isn't like. So I've got a good background in doing research and due diligence, and I was also, so I was doing analytic work and detective work there for 2.5 years, and then I worked for Clearlink, and I was an analyst there for like another 2 years, I think. So let's see, Trey just tweeted. Latest tweets. Okay, yeah, I'm still on my account, so no, that's not it. So Trey says to Melissa Lee, blame on all sides with real market impacts. Trey says, no, that is not it. This is a cold take. Naked shorting is not something retail investors partake in, and that is 10,000% institution and big money's fault. Real market impacts, for sure. Blame on all sides, not a chance. I completely agree with that. I mean, okay. Yeah, there is no way that so I'll like that response. I actually want to go to this tweet and make my own response here. So I'm going to quote the tweet. How are retail investors... actually, I want to quote that in a personal capacity, not a professional one. Let me come to this account. Okay. Blame on all sides. Sure. Because retail investors are totally, it's too many caps. Because retail investors are, and I don't like totally, let's do completely. And, Grammarly's not working there. So, because retail investors are completely able to take out short positions without borrowing shares first. That just means that this statement was sarcastic. And this isn't Reddit, people don't know what I'm talking about, so yeah. Oh, no, emoji. An emoji will get the point across. Let's see, eye roll. Can I search? Yes, I can search. And buying and holding a stock you like is somehow market manipulation. Give me a break. Boom, tweet was sent. All right. Man, Trey calling it out, love it. Okay, let's come back to my professional account. And let's see, West Christian, what do we got here? Naked shorts, give him hell this week, boys. That took balls. That took balls to do. All right. Just bought 8 shares and officially an AMC holder. Let's go. All right, good to have apes as part of the fight. Let's see. Bloomberg confirms AMC and Jamie are about to squeeze. Really? Highest S3 squeeze risk scores. AMC, GameStop, okay. And that's Bloomberg? I'm interested in what the comments say about that. The positive AMC news in the mainstream media is making me nervous. Let's see. Yeah, there's no no video, just a photo of a TV screen. Nothing worthy of note there. The SEC on the lookout for market manipulation. True. DD, my artwork made in front of Citadel this morning. We'll post more pics and videos as I get them. Yeah, this isn't DD. I'm gonna call that out. Actually, I'm gonna see if anybody else has called it out first and just upvote that. Oh my gosh, that's a copy pasta if I ever saw one. Okay, yeah, I'm not seeing anybody, so I'm going to call it out because we want to make sure that DD is marked appropriately because people can filter by that, and if people are filtering by that, they want to see stuff that strengthens our thesis. So, reflaring as AMC to the moon. Because yeah, this is awesome, but it's just not due diligence. Flare apes or thesis. Good job. All right. Let's see. Okay. We got some notifications on Twitter here. Liked my tweet, retweeted my tweet. All right. Okay, it's 4:17. I am joining a Twitter space at 5 o'clock to host a Q&A for some new apes with David versus Goliath, and I'm just going to stay on my live stream here to do that. So yeah, I'm not going anywhere. All right, if I didn't sell 77, let's see, finally got it done. All right. Okay. Wait, this is weird. I have to admit, I wasn't watching. I was too busy trying to fix bugs this morning. I wasn't really watching the price action live, but that looks concerning. And is there even a timestamp on that? Let's take a look. Yeah. 6/7/2021. Yeah, there it is. Yeah, we definitely want to turn off stop losses. I don't have any on. Ooh, yes, I did. Well, actually, a better place to look for news would probably be on Webull. Let's take a look. Chart, financials, releases, news. There we go. All right. Meme stock surge, a troubling signal for overall market. Warns TIG's manual, Trading Nation, how to trade the ETFs. Have exposure to meme stocks. Update. Stocks jump. Regulatory signals concern. I think that's what something we're looking for. What's really interesting is that, oh no, I did update Webull, because before, like, this news thing just didn't work. All right. Author's personal opinion does not constitute Reuters.com. I'm just going to copy the headline. Oh, It didn't copy? Let me just go to Google News. So, AMC. Let's go to news. CNBC, CNN, Reuters. I want to find that article. Let's go to Reuters.com. Reuters, and now let's search. So many freaking ads. AMC. Reuters. Here we go. All right, AMC, other meme stocks jump. Regulator signals concern. Close that out. All right, shares of AMC Entertainment Holdings and other meme stocks jumped on Monday, extending a rally in social media favorites into a third week as message boards hummed, blah, blah, blah. Sharp gains prompted the SEC to say it was looking into signs of market manipulation given the volatility in certain stocks. Volatility has challenged analysts. Two of them in the past week have stopped covering video game retailer GameStop, whose shares soared in January. Let's see, just technicals. Reddit quote. Insurance shares, institutional investors. Don't need a reason. Let's see. Where's the regulator concern part? Claims of brokerages fidelity and free trade. BlackBerry. SEC continues to monitor the market in light of ongoing volatility in certain stocks. An additional act to protect retail investors if violations of federal securities laws are found. This wasn't what I was looking for. Let's see. Wall Street body proposes new rules on short positions, stock loans, AMC, other meme stocks jump. Wait, that was literally just the update there. Hot stocks, insider trends. Okay, so I think, yeah, holy cow, that's a lot of articles just going back for today. I mentioned AMC. It's curious. What was I going to look into? Because there's the chart. Now, how are we doing? We got 55.70. Oh, wait, did we close at an even 55? I need to update that in my notes. Technical analysis. We closed at $55 even, which is up 14.8% from Friday's close. And it looks like we're just kind of oscillating around that area there. And my RSI up there, so high. All right. Oh, that's right. That's what I was going to do. I saved an article I ran into earlier today. I need to go to my saved profile. Saved. Hank's Big Bang. Quant Apes glitch the simulation. This was posted on Superstonk, which is a GME, which is a GameStop sub, but a lot of their DD can apply to us. We don't have a lot of wrinkle brains over on AMC stock. They're all over on GameStop. All right, introduction. Apes, because of the sheer amount of information in this post and because I wanted to get it to you at the beginning of this week because of earnings and the meeting, this post will not have the usual funny intro and memes. Usually my DDs are done completely by me with maybe some inspiration from a few apes or a section or a link from an ape or two. This one is not that. This DD is I'm not sure if I'm allowed to say that word on stream. Apes, I have gathered an effing army of quant apes. They have been gracious enough to team up and answer the questions that I posed in my previous post, and I am astonished at what they did. Seriously, I didn't expect this in my wildest dreams. Quant apes, I'm eternally grateful for what you have done, and I know that the sub is too. Again, this just shows how many extremely smart apes we have in this fight. This is going to be by far my most data-driven DD of all time. Maybe you have probably seen the spoilers that I gave in my request for data that this DD would be about using correlations, models, and data to get to an extremely high level of certainty that shorts have indeed not covered by analyzing GameStop as compared to other meme stocks and other indicators as well. This was inspired by the pretty obvious fact that they all have traded in very similar patterns since around December. I also noted that they all seem to have some sort of FTD cycle component to them as well. I really drew the line when all these stocks started this upward momentum in the past week. It was just too much of a coincidence for there not to be a relationship. A short squeeze is rare. Stocks following the same trading pattern is weird. A stock squeezing 2 times in less than a year is weird. A stock trading at over 4 times its book value consistently for months is weird. But 6 stocks doing all of those things simultaneously is asinine. Some might call it improbable, but I think we all know what it is. This DD will use data, a shit ton of it, to give us the closest proof next to actually seeing the hedge funds positions that they have indeed not covered. Enjoy. Roadmap. In this DD, I will discuss why the meme stocks craze is not just a bunch of retail traders pumping up stocks. Instead, it is the product of the greatest shorting fail in the market of all time that was made possible by easy money policies and apes' uncanny ability to buy and hold. Next, I will discuss the statistical significance and origin of the FTD cycle. Finally, I will give you a random dump of DD at the end of my thoughts. Part 1. A data-driven approach to the meme stock craze. A visualization of what you already knew. As many of you know from some of my previous posts, my thesis is that the meme stocks are all related. This was based on observations that the charts looked similar from December to now in terms of price action and volume. The quant apes did an excellent job of visualizing this. Below is a visualization of the meme stocks compared to cryptos and boomer stocks for reference. The parameters are volatility and volume. Let's dive into this. So we have crypto following Doge, industry averages, Kenny's stocks that he's long on, which is Amazon and Apple, and then all of the meme stocks here, and then normal stocks, and then responsive, percentage volatility, and it looks like there's some shading here. Suggests that's important, percentage volatility. Yeah, percentage volatility, crypto, industry averages. But yeah, definitely all the meme stocks trending together. A visualization of what you already assumed. This is a visualization of what we already know but haven't been able to prove. Let's see. The stocks are related. Looks like there's a relation, right? How can we be sure? If you took a college or high school statistics course, you probably know that there are certain tests you can run to determine if inputs are correlated by degree of the correlation, the certainty, and the statistical significance. Below, the quant apes used a statistical test. I won't explain it because you aren't familiar with this. If you aren't familiar with statistics, it'll take too long to explain, but this is not a guess. It uses an equation to determine the level of correlation, so it is extremely accurate to determine the correlation of GameStop to other meme stocks and the VIX. I put GameStop in red because it's all we at Superstonk care about right now. The top is a comparison of these stocks' entire data of all time, while the bottom compares them in the last year. Okay, so top is a comparison of all time, and the bottom compares them in the last year. So correlation. Oh, so this is all time, and this is just the past year. So it looks like COS is following GameStop more closely, and AMC has been following GameStop to a degree of 75%. That's weird. As you can see, the difference between all-time and the last year is striking. The above decimals are called correlation coefficients. They go up to 1, which means they are identically correlated. Anything above 70% is considered a strong correlation. As you can see, all of them except for Naked and Knock have a strong correlation to GME. What really struck me was the VIX. Because the market usually goes down when the VIX goes up, the fact that GME and the VIX have such a strong correlation in the past year is extremely important for our thesis that hedge funds are actively acting against it. The OTC data. The chart below takes the OTC data from FINRA and plots it for each of the meme stocks. Notice how they all seem to follow a pattern of spiking every few weeks, which is the FTD cycle, except for the blue one. The blue one is not a meme stock. It's Apple. I used Apple as a reference security so you can contrast how weird this is. Sadly, we don't have FINRA data before 2019, so it's difficult to analyze this in terms of when it started, but you can definitely see a related pattern of abnormality. What's that red? The red is, okay, so the red is GameStop, the green is AMC. What's this y-axis? Weekly volume. That's curious, because that was the January squeeze. So yeah, AMC saw a lot more volume in January than GameStop did, according to this. But yeah, definitely a correlation. And yeah, it looks like that weekly volume. Okay, so yeah, AMC followed GameStop really closely in weekly volume, as far as the raw volume and when, but as far as like when the spikes were, it kind of makes me think, let's see, so GameStop's, let's see, this was the February and this was the March spike. Let's go to Webull and look at the March spike and see what happened in there. All right, so this is the because that was volume, so we want to look at the volume spike. So initial spike, second spike, and the third spike. Third spike, the volume. GameStop spiked first. Oh. GameStop spiked first. No, they spiked at the same time. Gotcha, and we consolidated, and then we had the Wanda sell-off, or not the big one, but a Wanda sell-off in March. How common are squeezes? Squeezes are rare, extremely rare. Whether you think the January price run-up was a short squeeze, a gamma squeeze, or a big price increase does not matter, because in asking the quant apes to find the exact number of short squeezes that have occurred in the stock market, I gave them very broad parameters. The parameters I gave them were any stock that has doubled in price within a week. Because of this is undoubtedly a gross overestimate of the number of short squeezes in the history of the market. Some little-known penny stock getting FDA approval and going 4 times overnight. The numbers that they found show us just how rare a short squeeze is, and remember, even this is an overestimate, so they're probably even rarer. Quant apes use the major exchanges, and here are the results. Mid-market cap, price increase multiplier, consecutive days, stock count, relative to all stocks from exchange with the mid-market cap. Can't understand that data, here's the point, they are rare, even with the parameters that purposely overestimate it. They are so rare that you could call them an anomaly, because that's what they are. Remember, that's a purposeful overestimate. Small stocks getting good news, IPOs, etc. to be considered, so yes, short squeezes are rare. Multiple squeezes following the same pattern and all squeezing at the exact same time, some might call them improbable, but we all know what we call it. Manipulation. Mistake. Oh shoot, have I been sitting down for that long? Okay. I need to pay attention to my watch a bit more. Standpoints are low. Been sitting for a while. The FTD cycle is the idea that because of SEC regulations requiring market makers to cover failure to delivers within 35 calendar days, there is a predictable increase in price and volume every 21-ish days, trading days, or 35 calendar days. So far, it has continued to repeat itself. The idea that the shorts are in so deep that they are doing the bare minimum to cover and continue to dig themselves in a deeper hole by kicking the can down the road it is currently increasing exponentially, which indicates that this is getting more and more expensive for shorts to stay in the game. Orange line represents the FTD cycle increases each month. Yellow lines are FTD cycles. Disregard the red lines, those were my trend lines before we broke out. Okay. Oh, Trey tweeted. Okay. Notifications. Oh gosh. Enhance. This is a chart that the quantapes gather from Ortec showing the SI of the meme stocks over time. Many of you will say that this is inaccurate because the real SI is hidden. In many instances of that being true is the best concrete data that we can gather. So that's what we must use to avoid speculation. So yes, these numbers are probably an understatement, but that's a good thing because we do not want to speculate. If we can find significant results or on incomplete data, our thesis is strengthened. Curious. Where's GameStop at on the 5th? Why did they leave that out? Notice some very interesting things from this chart. First, I noticed that the SI and most of the meme stocks markedly increased in 2019. So a slight but noticeable rise. This was in 2016 as well. Short volume, get the big picture. We have one concurrent viewer right now. Is there anybody in the chat right now? Zach, are you still here? Or is it just me? I'm not sure if it counts me as a viewer. Alright, holy crap, that like fried my brain. Alright. Get back to the minute chart. Alright, I think we are above 56. That is good. Being above 56 is good. If we look at the VWAP. Yeah. If we look at the VWAP, we're even above where the VWAP was at close. Hoping that we gap up tomorrow. size, I can shrink this down to size 5518 right now. All right. Okay, so I think that's actually where I'm going to end it off. I feel like I'm done with any research I would need to do based on current news, which was pretty much just this. So I think I'm going to cut it off here. I am going to be in a Twitter space in 15 minutes answering questions there. And then I will make a polished up video going over this and doing the day's technical analysis. And we will go from there. So thanks everyone for watching, and we will see you next time.